what is really going on here? What is happening? Why is gold relentlessly climbing? Why is silver now possibly catching fire? It's one word. It's trust. The world doesn't trust itself anymore. And when it doesn't trust itself, there's no future. And if there's no futures in markets, there's only collateral. There's only good unencumbered collateral. There's only real money. There's only things that don't have debt attached to them or the ability to be fabricated or manipulated by humanity. And that's gold and silver.
This week, gold prices surged to a new record high of around $2,200 per troy ounce following the Federal Reserve's decision to maintain its outlook for 3 interest rate cuts, despite multiple hotter-than-expected inflation reports. The precious metal saw immediate growth after the Fed announced its decision to keep rates unchanged for the 5th consecutive meeting, with silver also experiencing a notable 1.55% gain. Market trader Vince Lanci noted that Federal Reserve Chair Jerome Powell adopted a more dovish tone during the press conference, alleviating market concerns and leading to a surge in gold and silver prices. UBS forecasts further climb in gold and silver prices in 2024, anticipating that the U.S. Federal Reserve will initiate interest rate cuts. Joni Teves, the investment bank's precious metals strategist, emphasized that expectations of Fed easing and a weaker dollar will likely propel gold prices to $2,200 per ounce by year-end. Central banks have been purchasing gold unprecedentedly, acquiring over 2,100 tons in the past 2 years, fueling strong demand. In 2023, the People's Bank of China emerged as the top gold purchaser, with significant acquisitions also made by Poland and Singapore. Driven by financial stability concerns amid geopolitical tensions, these purchases have contributed to sustaining robust gold prices. However, Lanci cautioned that speculative buying has been driving the recent gold rally, with concerns arising over potential central bank pullback due to the price surge, as highlighted in a report by a Swiss canton bank. This possibility could limit short-term price gains. Join us as we delve into insights shared by Vince Lanci. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Today, what happened at the FOMC yesterday to cause gold to rally? All right, now I have, as I said, there's the whole write-up on that, but I'll give you the summary. Powell's rate decision and all the information that came out with it was hawkish, was slightly hawkish. But the markets ignored that. All the markets ignored it. Stocks went up, gold went up, silver went up. And then they kind of paused. And then the press conference started. I told you, I warned you about the press conferences. They can be a wild card. Well, his tone during the press conference was incredibly mild, incredibly dovish. So when people asked him questions, should we be worried about more hawkishness? He's like, basically, nah, it's okay. Don't worry about it. So the market's just ripped, and I'll pull the charts up on that in a second. So that's what happened. Now, the market's closed. So gold was strong, up a little over 1%, but still within that range, still trading, I don't know, 22, listen to me, 2160, getting as high as 2180 in that range. And then the market closed, and I was like, okay, we're still in the range, high end of the range, but still in the range, and then the market reopens, and boom, trades 22.22, backing off, as you can see right there, trading 22.07. Silver, despite having a big rally, I mean, silver's on fire now, okay? So I'm not going to pour any water on this. This little sell-off here you're looking at, that's the game. That's the game. When you want to keep a lid on gold and you need to buy gold, you put your foot on silver's neck for a little bit. Don't worry about it. This is a beach ball now. This is, gold keeps going up, silver will follow. They're going to have to cover their silver sometime. Anyway, okay, so that's what happened in the Fed yesterday. Let me put up a chart or two on that note. I think I can go right here, right? Yeah. So there's the whole story, and here's what happened in silver, right? Up and down, that's what happened when before the Fed presser. So it's like the market interpreted it as dovish, kind of weird, right? And then the market said, oh, no, this is bearish. And it went back to, being up and not up a lot. And then the presser started and it was like, boom, silver just took off, right? Gold, it doesn't look as good on scale because of this here, right? Gold, same idea. Up on the announcement, down as the market was like, wait a minute, this isn't really bullish. and then the pressure starts. Now, the reason this looks smaller than the silver move, well, the silver move is bigger, but this little area here, at 6 p.m. it reopens and the market just explodes higher. That's a 5-minute chart. The 1-minute chart is a $27 moving gold. It's ridiculous, you know. I think somebody probably got blown out and covered shorts, but we'll find it. We'll find out soon enough. Well, maybe we won't find out. Okay, so what's next? Oh, let me go to the market. Not the market news, but the commentary. So here's an excerpt from the premium. There's a bank called I'm not sure how to pronounce Swiss, but they're a canton bank, right? So cantons are like states or regions, and they're very important. It's a federalist concept. They have a report out, and we'll talk about who they are in a second. Right? Here's what it says. The price of gold has recently risen sharply, driven by speculative buying. This will temporarily dampen gold purchases by central banks, which means demand potential for significantly higher prices does not exist for the time being. Pretty interesting that they would say that. Central banks don't chase is what they're saying.
Although silver is less commonly regarded as a geopolitical and safety haven than gold, it has underperformed in recent years. However, according to strategist Joni Teves, this trend could reverse in the event of the Federal Reserve easing. Teves suggests that silver outperforms gold in such scenarios and could experience a significant uptrend. She attributes silver's underperformance to its potential for catching up to gold and foresees the possibility of a dramatic move. Silver's performance is closely linked to the overall economy's health due to its extensive industrial applications. The precious metal is widely used in various sectors, such as automobile manufacturing, solar panels, jewelry, and electronics. Market trader Vince Lanci highlights the growing lack of trust in traditional financial systems and institutions, which has led to the rise of alternative assets like gold and silver. In times of uncertainty, these assets are perceived as more reliable stores of value, driving increased interest and investment in them. Let's get back to the interview.
Intel will receive $8.5 billion in direct funding and $11 billion in loans from the U.S. government to expand its capacity to make high-end chips as it seeks to reinvent itself as a national champion in the sector and compete with the likes of Taiwan's TSMC and South Korea's Samsung. Boom. That's the United States nationalizing a key industry. That's how the West nationalizes. We give you money. There are strings attached to it. I'm not being cynical. That's how it works. We need to protect this industry. We can't rely on other industries. And, we're probably going to have to give Taiwan back to China eventually. That's how it works. The Justice Department is poised to sue Apple as soon as Thursday. Sacred cows are now being attacked. This is a lack of trust. It's all about trust now. Boeing has warned that it will burn more cash in the first quarter than previously expected because their planes keep falling apart. Well, there you go. Same idea. Okay, a quick final word. What is really going on here? What is happening? Why is gold relentlessly climbing? Why is silver now possibly catching fire? Why is Bitcoin, besides the ETF, resilient in its march upward? It's one word. It's trust. The world doesn't trust itself anymore. And when it doesn't trust itself, there's no future. And if there's no futures in markets, there's only collateral. There's only good unencumbered collateral. There's only real money. There's only things that don't have debt attached to them or the ability to be fabricated or manipulated by humanity. And that's gold and silver. Now, Bitcoin may be in that category, but we're not going to talk about that now, except to say that let's assume that it's as good as gold. I'm not going to debate that with you, but I want you to assume that for the moment. Even if it is, they can't use it. It's privately created, okay? Central banks don't all own it. Gold is truly the only objective money in the world. It's not made by man.
In light of the recent record-breaking rise in gold prices, propelled by the Federal Reserve's accommodative stance and sustained central bank acquisitions, how do you envision the trajectory of the precious metals market unfolding in the coming months? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.